The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Hello everybody, this is Coach D with TackleTrading.com, here to give you a quick market update and recap, kind of let you see what's going on with the market right now. S&P and NASDAQ major indices all still continuing to climb. If you really want to take a look at it and just pause, let me grab my drawing tool here real quick and just kind of look at it from a trend perspective. This is really what I'd consider kind of a rising wedge pattern in general. We've got like the higher lows, higher highs, but it's definitely in a rising wedge type pattern overall. A lot of overhead congestion out here, a lot of known resistance points. I won't be surprised if the market breaks through them, but overall this feels a little hollow. As far as the economics and pieces behind that, you'll notice the volume's been tapering on average, and it is the biggest run we've really seen. If you kind of go back and look at it in context, let's go back and pop in. We'll go really 3-year weekly here. You can kind of see this is really as big of a run as we saw last year from October through December. So you got that run last year, very strong, solid, lasted for several weeks, didn't really end till December, then dropped. So that's kind of what we're looking at right here. This one started mid-October. Here we really started taking off late September, so just right before October. And it's now again 1, 2, 3, 4, 5, 6, 7, 8 weeks into it. 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, 10th week it dropped. So that's kind of what we'd be looking at. I wouldn't be surprised to see it continue to rise, test those highs. But again, you'll notice here the volume waned as it rose into the holidays. You typically see that, and just keep an eye on that. So still cautiously bullish, but I'm a little hesitant to enter into new bullish trades. Let's drop back into our daily time frame. And drop in NASDAQ is leading the charge, strongest of the bunch. It's clearing the highs, making new highs. So if it does retrace, watch for it to retest. Dow Jones Industrial Average is in very similar rising wedge pattern into the same overhead congestion, and it's again decreasing tapering volume. The Russell 2000 has not been nearly as vigorous. It's broken those highs. Still very much in a kiss goodbye zone, and it is pressing forward. Typical volume. It's probably going to continue to run with the rest of the market, but again, won't be surprised if we see reversals. Take a look at the dollar index real quick here. Dollar broke into new highs and kind of bounced and checked off of those zones here. So this is kind of the support resistance zone I see on the dollar index. And coming off that, kind of bounce and giving us, expecting to see some upward movement in price. Dollar strengthening, again, by comparison to the other currencies. So then we've got, let's take a quick look at crude light, and puts in some higher lows and actually strengthening. Consumption typically does increase this time, but it's going to be a question of not just consumption but supply. And I do think that we'll see some increased consumption, supplies diminishing a little bit, so I wouldn't be surprised to see this come back up, test that $50 range. Now, dollar strengthening, gold and silver have been getting beat up, and this is GC gold contract here. And interesting, in just a trend zone, it's been dropping hard, but that's a buy zone in there, and could watch for a short-term reversal. So you could take a directional stab at gold, expecting it to maybe rise, but of course wait for your confirmation on that. And you'll see very, very similar personality traits here in silver, SI. And this one's a little, I think, easier to take a stab at. I actually like this. We'll be putting on the stock report, stock picks here, where it's broken out, coming down, testing on the moving averages. And just kind of in general, this support resistance neighborhood in here It's trend ballparkish, moving averages, it's got signal candles, and I would be cautiously bullish on that. So like the gold, like the silver, of course, you could use the GLD and the SLV ETFs for potential trades. And overall market conditions, let's take a look at the volatility index. And VIX is down at 14-ish. When the VIX is low, it can go lower. Certainly not down at its lows when you see it down here at 11. But it's come back down, which means options are going to be slightly more affordable across the board as we're getting through the tail end of earnings season. And we've seen most companies, already report. A couple of people still lingering out there, but you'll see option premiums going to be a little bit more affordable. So when you're looking to pick up stocks, lower volatility, a little bit lower premium, which will also make it a little bit harder when you're going to sell your premiums. And on your theta trades, you're looking for premiums there. You're going to have to look for stocks with slightly higher implied volatility, or again, maybe go a little bit less aggressive on the indexes in general. Now, let's just come back one last time to the E-mini S&P, because that's generally our go-to. And it is when we look at it as far as can it go higher, of course it can. It is extended up significantly. It's been the biggest run we've had since last October. And it's really, gone and corrected. Whoops. Let's see if we can just kind of look at it from a perspective of it's corrected, the drop and that rally as far as like how much price action's been given up. It's taken it all back. And we're just in this general area of consolidation out in here. So a lot of price action in there to potentially hold it down. And I'd look for a retracement in the next couple of days. Whether or not we get that would be maybe not towards the end of the week. You've got to watch some of the monetary policy and things coming out. First Friday of the month is non-farms payroll this week. You've got Mario Draghi speaking tomorrow. You also have Fed speaking on Thursday, if memory serves. So you've got, just Yellen testifying versus, the ECB, testifying. So you got big monetary policy people talking Wednesday, Thursday, non-farms payroll and unemployment claims Friday. And with seasonal help increase, I actually would look for the unemployment claims to be okay, which could be further fuel for the fire. But read a few articles, one on Zero Hedge specifically that was talking about just how hollow the overall run is. But overall, the trend is your friend, so as you're trading things, sticking to the trends would be wise to continue to stick with those trends. And if you're looking for good things to trade, just make sure you're being very thorough in your analysis, both technical, you're lining up your fundamentals with your technicals, and watching out for earnings, and you just kind of understand, and most importantly, have a good plan for your trade, both entry and exit, and remember to use those position sizing calculators to your advantage. This is Coach D with TackleTrading.com. Hope to see you all in the clubhouse, and look forward to seeing more of you out there in the clubhouse, and always looking for those trading ideas. So keep sharing.
Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.